Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. Thank you for stopping by. Let me start with oil, which has been so dramatic. Oil plunged more than 6% yesterday in London after a report that Saudi Arabia is close to restoring 70% of the oil production lost after the weekend's attack. The last time I checked on Brent, we were at $64.31. I think the geopolitical premium that has got to be put into the oil price is actually is worth about $10, because I think we'll continue to see this kind of threat. And therefore, I particularly like looking out the curve into 2020 and buying on these vicious reverses which are driven by the news flow. So bear that in mind. Now, very dramatic developments in the US repo market. I was a repo trader. I ran repo trading desks many years ago, and the US overnight repo rate jumped to 10%, which is the highest in years. This is a chart from Jamie at Reuters. The Federal Reserve was forced to inject billions of dollars into the financial system, offered $75 billion in short-term operation to alleviate the funding squeeze. The operation appeared to have steadied the money markets. The repo rate tumbled to around zero soon after the Fed announced its maneuver. There's a terrific explanation from Trigonometrics, who explains the whole repo thing. That link is on Rich Wrap-Ups if you're interested in diving more deeply into this really unusual situation. One is used to this happening at quarter ends and year ends, and of course YK2 you'll recall, but this is highly unusual at this time of year. The Financial Times has a great report on how the global bond rally lost its fizz, is the headline. $1 trillion fall in the value of global bond markets this month, rekindling one of the biggest debates in finance. Is the bull run in bonds finally coming to an end? By the end of August, some $17 trillion of bonds, about a third of the global total, were trading at such high prices that buyers were guaranteed a loss if they held them to maturity, rewriting the rules of fund management. The yield on the Bloomberg Barclays Multiverse Index, the broadest bond market gauge that tracks debt with a total value of more than $58 trillion, jumped sharply this month from a record low of 1.4% to 1.65% as of the end of Friday. That's a big move. In dollar terms, that translated into the global bond market losing over $1 trillion of value in just 10 trading sessions. The moves have been very sharp. 10-year US Treasury yield got as low as 1.46% in August, then jumped to 1.82%. The German Bund yield minus 0.71% low, now at minus 0.49%. UK 10-year Gilt edged up from 0.41% to 0.68%. Benchmark borrowing costs in Japan, where they have this yield curve control policy, risen from minus 0.29% to minus 0.15%. This, if sustained, will be the worst monthly loss in over a year and the 13th biggest monthly decline of the past decade. Since the ECB meeting last week, the market's narrative seems to be changing, and RBC, we recommend not to fight the yield increase. Inflation, the market's kryptonite, remains an unlikely danger, says the Financial Times. However, that's not the case in the US, and I think not enough attention has been paid to this. Markets tend to move on sentiment and mood, but the mood music has not picked up on this sufficiently in my view. This is an interesting point. The pension funds, the insurers, they don't have a choice, and that is not going to change tomorrow. You're still going to have the flows, and this is a fact. Now, I know in 2016, when I wrote that article about Hotel California, I was predicting that this whole thing was going to unwind, and it didn't. But this year, on the 19th of August, I wrote safe havens are priced for Armageddon now. I was referencing a Bank of America research piece by Stefano Pasquale, written on August 13, when he said investors have not been so worried about the future in the past 30 years. And my point was that if they were so worried, it was so extreme, unless the world ended, you had to kind of retrace from that position. And essentially, that's what we've seen happen. And I was also, on the 15th of July, saying this is a quite incredible moment in monetary policy making, where the markets have led, I believe, policymakers, particularly in the US, by the nose into a situation of voodoo economics, plain and simple. And I was saying specifically with respect to the US, stoking up the fire with rate cuts is a very dangerous situation, because according to my calculations, the Fed will then need to be raising rates into the election next year, something that would surely turn Trump apoplectic. 1st of July, I was talking about interest rates, which at that point the market was pricing in a halving of the Fed funds rate, which really is the key rate setting mechanism for the entire world, from 2.5% to 1.25%. And I was saying if I were back at my trading desk all those years ago at Credit Suisse First Boston, I would have been limit short the Eurodollar market at that level, because I was saying reality would soon intrude on that reality show. 24th of June, I was using the example of Wizard of Oz, and I said eventually it is revealed that Oz is actually none of these things, but rather an ordinary con man from Omaha, Nebraska, who has been using elaborate magic tricks and props to make himself seem great and powerful. And I was saying that, we are going to get the moment when the curtain is lifted. And I think what that FT article is saying is we've had the curtain lifted to some degree. And then 3rd of June, bond yields in tilt mode. And there I was saying, look, I was talking about the tariffs in particular, and I said, 2080 was my ratio of absorption. 20% would be absorbed by the US consumer, who has been very muscular, and people don't give enough credit to that. And 80% would have to be absorbed by China. And I was saying, look, even 20% of 100 is inflationary. And we've seen inflation. If you look at the last 3 months inflation trend in the US, it's spiking. And I was saying, therefore, US rates and bond markets look seriously overcooked to me. But I also said markets can stay irrational longer than we can stay solvent as well. So those are my thoughts. Today, I think, is a really crucial day. We're going to find out whether it's ergonomics here in the United States or whether we have an independent Federal Reserve. And if we have an independent Federal Reserve, we're going to get a very hawkish, no change conclusion. And I think the market's simply not prepared for that at this point in time. Let's turn to home thoughts. Large croc relaxes while zebras cross the Mara, monster in our midst. The reason that croc is so relaxed and the zebras are relaxed about going by it is surely he's gorged himself, because at this time of year all the zebras and wildebeest are crossing the Mara River, and it's a veritable Babette's feast for crocodiles and lions. In my article about the oil markets, when I was talking about the early hours, I said jinns stalk those early hours, particularly in the FX markets. And jinns are actually made of a smokeless and scorching fire. They are usually invisible to humans, but humans do appear clearly to jinn. As they can possess them, jinn have the power to travel large distances at extreme speeds and are thought to live in remote areas. And my article was about the oil markets, and I said all global markets have become liquidity traps. The oil markets trade 24 hours, but in the early hours is when gremlins, wizards, and jinns stalk them. And I was advising people to go the way of one touch when it comes to the oil markets, because, you know, it can go up, it can come down. And then I was rereading Thomas Pynchon's Gravity's Rainbow, the doper's dream. Last night I dreamed I was plugged right into a bubbling hookah so high, when all of a sudden some Arab jinni jump up, just a winking his eye. "I'm here to obey all your wishes," he told me. As for words, I was trying to grope. "Good buddy," I cried, "you could surely oblige me by turning me on to some dope." With a big fat smile, he took a hold of my hand and we flew down the sky in a flash. And the first thing I saw in the land where he took me was a whole solid mountain of hash. All the trees was a-blooming with pink and purple pills, where the Romilar River flowed by, to the magic mushrooms as wild as a rainbow, so pretty that I wanted to cry. All the girls come to greet us so sweet in slow motion, morning glories woven into their hair, bringing great big handfuls of snowy cocaine, all their dope they were eager to share. We dallied for days just a-ballin' and smoking in the flowering Panama red, just pigging on peyote and nutmeg tea, and those brownies so kind to your head. Now I could have passed that good time forever, and I really was fixing to stay. And you know that Ginny turned out to be a narco man, and he busted me right where I lay, and he took me back to a cold, cold world, now in prisons wherever I be, and I dream of the days back in Doper land, and I wonder, will I ever go free? Which is Pynchon's interpretation of what the jinns can do to humans. Everything is barely weeks, everything is days. We have minutes to live, Don DeLillo Cosmopolis. And we're the last billionth of a second in the evolution of matter, which I think is so powerful when you think of the time, the length of time the universe has been there, and how long we have existed. It's such a little smidgen. Political reflections. Benjamin Netanyahu left vulnerable by inconclusive Israeli election. Political future hung in the balance as Israeli voters delivered another inconclusive election result with no clear path to a majority for either the four-term Prime Minister's Likud party or his rivals in the Blue and White Alliance. Exit polls run by local television channels said it was essentially a referendum on Netanyahu and on the role of Judaism in Israeli public life, and has thrown up a limited range of options. We're witnessing quite a dramatic outcome. For the first time in a decade, there is a high likelihood that Netanyahu will not serve as a prime minister. Lieberman, we have only one option, a national liberal broad government, he said, after emerging as the predicted kingmaker with between 8 and 11 seats forecast by the exit polls. I actually met him here at Nairobi a few years back when he was the foreign minister. And I take it back to October 2013 when I was writing about this Iran-US deal under President Obama, and I said, if the Pax Americana in the Middle East were a three-legged stool with the US the most important leg, then Israel and Saudi Arabia are the other two legs of that stool. Saudi oil attacks came from southwest Iran, a US official said just momentarily a few minutes ago on Reuters. Vice President Pence says the US military is ready after the Saudi oil attacks. Then I saw this rather tongue-in-cheek tweet from Mark G.B. blog. US intelligence have found a drone fragment with Made in Tehran embossed on the side, along with a postcard that says greetings from the Ayatollahs. There was also a button from an IRGC uniform and a strong smell of halwa. The best halwa I've ever had was actually in Malindi, where we used to drive for 2 hours just to eat it and swim in the sea. I tweeted a few days ago, well actually on September the 16th, that the burden of proof is what Iran is relying on in this matter, and Trump and Pompeo to date are falling woefully short, and this cry-wolf strategy is eroding their bona fides exponentially, and I think they got like 3 strikes before people just don't believe them anymore, but they seem very convinced about this, so we'll have to keep an eye and see what comes out today. Jean-Yves Le Drian, the French minister, says up to now France doesn't have evidence to say that these drones come from one place or another, and I don't know if anyone has the evidence, he said. The Financial Times, when Trump discovered the real Middle East, hurt us and will hurt your friends. That's been the apparent Iranian strategy since the US launched its maximum pressure mode. The objective has been to demonstrate that the pain of US penalties will be spread around. If Iran can't sell oil, other producers in the market will suffer too. On Saturday, this is the FT, Iran's playbook was torn up in a brazen attack. An Iranian-backed group struck at the jewel in the Saudi crown, the Abqaiq processing center that handles half of Saudi production as well as an oil field, saying whatever the answers, the responsibility will fall on Iran. This provocation was a step too far. And the proxies it can use from Yemen to Iraq, Syria and Lebanon provide leverage, which they do, that cannot be matched by Gulf states, that we know, underlined the disastrous failure of Riyadh's 4-year military campaign in Yemen intended to crush the Houthis who may be behind the latest attack. As I said before, it's an unwinnable war. Whether by accident or design, Iran has now overreached, says the Financial Times. So grave has the attack been that the US and Saudi Arabia have not rushed into a response. A military retaliation could come at any time, and it would also expose Saudi Arabia to more attacks. An uncontrollable Middle Eastern conflict is not what Trump wants just as he heads into a re-election campaign. Not a student of history or a man of details, he is discovering the hard way that it is easier to start a crisis in the Middle East than to control it, let alone to end it. 13th of May, I said this level of financial and coercive sanction warfare is simply unprecedented. And in the same article that Trump has been a big proponent of coercive financial sanction warfare, and its expression vis-a-vis Iran is frankly its apogee. Saudi oil attacks highlights Middle East's drone war, saying about the Saudis they've been in a panic over drones since the new year. This is the advent of a 21st century drone warfare in the Middle East, said Bilal Saab. In this race, the advantage is to the adversary because our responses are not efficient. And this is classic asymmetric warfare, right? Billions of dollars you've spent on all these defense systems, yet something that costs, nothing can penetrate. Israeli military, of course, last year said it shot down an explosive-laden Iranian drone as it flew over the Sea of Galilee. Hezbollah accused Israel of using a drone to strike its media office in Beirut. Iraq, Saudi Arabia, and the UAE import drones from markets such as China. Israel, Iran, and Turkey manufacture their own. It's a target-rich environment with existing conflicts occurring across large swathes of the region. The asymmetry between strike and response is notable. Israel has used Patriot missiles costing $3 to $4 million to take down quadcopter drones costing about $1,000. There you go, definition of asymmetric warfare. He describes Iranian-designed drones manufactured in Yemen by Houthi groups on 3D printers fitted at the last minute with Iranian electronics. These are not particularly sophisticated. I would be looking at multiple layers of sensing technology, radars, cameras, microphones, radio frequency scanning technology, electronic warfare, and then the full range of countermeasures that go with that. Compare the current defense gap to the strategic threat faced by US forces encountering IEDs after the Iraq invasion. Warned of drone swarms, techniques to manipulate flight paths, and masking of radar signals. Expect more of those, he said. This is the tip of the iceberg. Here you see a US government image of damage to the Abqaiq oil facility in Saudi Arabia. My article over the weekend was drone strikes deep inside the kingdom. 13th of May, I said if the US thinks Tehran will just roll over, which appears to be the case, then they're exhibiting the same deluded ideas that they exhibited a day before the peacock throne got plucked. Khamenei, if the US repents and returns to the JCPOA it withdrew from, then it can join and talk with Iran. Otherwise, no negotiation will take place between the Islamic Republic and US officials at any level. And then in 17th of June, I was quoting Stratfor, which said the overwhelming confidence that Iran is displaying, both in rhetoric and action, is astounding. This from JKM Energy, Brent front month futures surged 14.6% on September the 16th, increase of 6.65 standard deviations, largest percentage one-day price move on record. Of course, a lot of that was reversed yesterday. Thomas Pynchon, Gravity's Rainbow, strange are the dynamics of oil and the ways of oil men. My article, I was saying the overwhelming geopolitical question is around the longevity of the House of Saud and its crown prince. Look at this, the Abqaiq attack shifted Saudi's entire sovereign funding curve higher. That's Tracy Alloway. Turning to Don DeLillo, because last week was the anniversary of 9/11, you live in a tower that soars to heaven and goes unpunished by God. A major Russian research center, this is unbelievable, this is the third incident, Novosibirsk, studying lethal viruses, including Ebola and HIV, says there was no biological contamination from an explosion and fire in one of its buildings. Tom R. tweets, how does a bioweapons lab blow up? Were they messing around with weaponization platforms? As I've written before, the frontier from Xinjiang to Kashmir, from Gaza to Crimea, from Hong Kong to Taiwan, are 21st century flashpoints. India says it's ready to move forward and reclaim Pakistan's share of Kashmir. That's from RT.com. Hong Kong, look at this financial orbit. I still think it's not possible to Xinjiang Hong Kong. Moody's has downgraded Hong Kong's outlook to negative, rising risk of an erosion in the strength of Hong Kong's institutions amid the city's ongoing protests. J. Kyle Bass, Hong Kong reserves dropped $16 billion in the month of August, as reported by the HKMA. Why is so much dollars leaving so fast, he asks. Very interesting article in the FT again. Over half the increase in Chinese household savings since the 1970s can be attributed to the one-child policy, says Charles Robertson of Renaissance Capital. His thesis is that, broadly speaking, people with lots of kids don't save money. Interesting point, saying as a result, there's a surprisingly high correlation between fertility rates and bank deposits to GDP, a correlation which holds in the 1990s as well as today and across a great many countries. 53% correlation between countries' fertility rate, measured by the number of children per woman, and its bank deposits to GDP ratio. And it's a tremendously fascinating article. China's bank deposits are equal to 210% of GDP compared with 33% in Kenya. And it's well worth reading, saying countries with higher birth rates such as Ethiopia, Ivory Coast, Rwanda, Senegal and Tanzania are less likely to see a sharp rise in bank deposits, he argued, but more modest growth from about 20% of GDP to about 30% is plausible over the same time period, which would be helpful but not a game changer. He advises to be cautious of Nigeria and Angola, two of the three largest economies in sub-Saharan Africa, which have fertility rates of 5 or more, according to the UN. For Angola and Nigeria, it will take 20 years before their fertility rates decline to 4. So until then, we should not expect a big increase in the share of bank deposits, he said. Well worth reading in full on the FT. Let's move on to the currency markets. Eurodollar 110.54. Dollar index 98.535, Japanese yen 108.19, Swiss franc 0.9936, the pound up down 124.76. The Australian dollar is not looking too clever, 0.6835, India rupee 71.308, South Korean won 1191.44, Rial 4077, Egyptian pound 16.32, South African rand 14.67. Dollar index, this chart is from Chartlines, 98.535. I think we could be over 100 tonight if things play out in the way I expect. Eurodollar 110.54. This chart is from Trading Shop 3. I think we could be at 109.26 tonight. WeWork bond prices tumble after it shelves the IPO. The price of the bond hit a low of 95.5 on the dollar, down sharply from the 103 cents on the dollar it had traded on Monday. Losses have swelled alongside its growing sales base. Company lost roughly $2 for every dollar revenue it generated last year. It is extraordinary. They were expecting a valuation of $47 billion, and they can't even get to 15 to 18 at the moment, according to the lead managers. Commodity markets, gold, let's have a look, 1502 area. We've been doing a lot of work around 1500. My target is 1480 short term. Brent oil, as I said, dropped more than 5% on faster Saudi output return. This is a chart of Brent from Holger, then the chart of WTI from JS Blockland, last just below $59. But I think if we see further sharp falls on news flow, look out the curve, look at getting long out there, because the geopolitical risk has gone considerably higher since those drones struck deep inside the kingdom. India's stock market is in a very vulnerable position. That's David Inglis. And as I said severally, the markets emit the purest signal. DRC Felix Tshisekedi is in Brussels to turn the page on the Kabila years. Africa report landed in Brussels on Monday, 4-day state visit, tight schedule. Question marks over potential visit to Paris in mid-September. It's finally to Brussels. He lived there for a long time. First official visit to Europe as a head of state. He'll be greeted with tremendous fanfare. In fact, he was met by the king, as you can see in this photograph, Le Roi de Belge. And as I said on the 29th of July, notwithstanding the shenanigans around the election, I think he's building momentum from a low base, and it's a case of slowly catching monkey, the monkey being President Kabila, of course. Zimbabwe's currency crisis is so bad it makes Argentina seem mild. The Zimbabwe dollar has lost a massive 81% of its value against the dollar this year. That's from Paul Wallace. I take you back to January when I was reading Yuval And he said money is the most universal and most efficient system of mutual trust ever devised. And not just any system of mutual trust. Money is the most universal. And the problem is there's no trust in Zimbabwe's authorities. So therefore, they are in a negative feedback loop, which they simply cannot snap. And I take you back to October 2018, when I said they, using voodoo economics, they spent $1.3 billion of money they didn't have to try and win the election. And that was really the straw that broke the camel's back. Uganda's oil ambitions delayed as deals stalled. 13 years after the first discoveries were made, Total said it was stopping technical work on the oil field and pipeline project following the collapse of a deal to buy additional equity from Tullow and the failure of talks with the Ugandan government to agree legal terms for the investment. They have not given any formal communication of an intention to cease work, said the Ugandan minister, clutching at straws. Total and CONOC had each agreed to acquire an additional 11% of the project from Tullow in a $900 million deal in 2017, but the disputes around that, the Ugandans are trying to charge some capital gains tax, they're not having it. There is a fundamental capital gains tax issue on this project, but also a raft of other issues to be resolved before an investment decision can be made. If we look historically at the timelines that have been proposed on those projects, there's been an over-optimism in the market, both about the ease and time needed to develop East Africa's big discoveries, Wood Mackenzie's Mr. Lawrence. This is a photograph of Lake Albert. Project estimated to cost $10 billion would require a 1,443 kilometre electrically heated pipeline. South African oil share up 7.89% year to date. Dollar versus Rand, 14.6533. I think the Rand is now at the top of the range and going to sell off. Egyptian pound, 16.2950, tremendous performance. EGX 30 up 13.17% year to date. Nigerian oil share down 12.8% year to date. Nigeria's inflation slowed to 11.02% year on year, still one of the highest in Africa. Zimbabwe is, of course, the highest. Ghana's stock exchange down 10.15%. Every time we pay interest with new borrowing, we compound our debt servicing. That's why it's growing so fast. Our debt is on a geometric growth path. That's in Derry. As I said in July, at the end of July, balance sheets in Africa are fully loaded. Michael Joseph of Kenya Airways calls for a professional board after nationalisation. We do not want to create a situation that we had before, where you nationalise the airline and all it becomes is a department of government. The board of directors is loaded by friends of politicians. Good luck on that one. Kenya shilling 103.90. Nairobi all share up 2.69% year to date. Safaricom's institutional shareholders data via the FT. Safaricom shillings 27.20 cents, trading on a trading P of 17.215, and the NSE 20 down 13.77% and close to a 10-year low. And that dead parrot sketch sums it up from Monty Python. Thanks for listening.